And we welcome you back to our Money Minute. Another sour day on Wall Street, as you may have heard by now. All major indices falling nearly 3% today. Oil also saw close to an 8% drop. The tumble is being blamed on fears of China's weak economic health. The uncertainty of a Fed rate hike, has also caused uncertainty in today's exchanges. And legendary investor Jim Rogers tells Newsmax the Federal Reserve could make things worse.
Maybe they can save the market one more time, but the world is starting to give up on all this artificial money printing.
You can see the entire interview at newsmaxtv.com. American factories expanded at its slowest pace since May of 2013. The manufacturing slowdown is being attributed to the dollar's rising value. That makes it more difficult to sell American products overseas. And Walmart is cutting its employee hours in some stores. The company is dealing with falling profits. The superstore chain is slashing employee schedules to lower overhead. Higher minimum wages are also cited as a reason for the shorter shifts. An equal pay bill in California heads to Governor Jerry Brown's desk for approval. The legislation will prevent different pay by employers among people who do, quote, substantially similar work. And for more on today's market sell-off, we turn now to the senior editor of the High Income Factor newsletter, Tom Hutchinson. Tom, good to have you with us.
Great to be with you, John.
All right, the Fed has kept rates low for years, and now the dollar rising, stocks falling, Wall Street is panicking. Has the Fed lost control of the market, of the economy?
Well, it has lost a bit of control of the market, indeed, because now the shots are being called internationally, namely from China. You see, the Fed had buoyed the market for years, and the market, I think, soared higher than the economy should have allowed. But then as the economy started to catch up a little, the U.S. economy, the Fed pulled back. It withdrew its QE3 and got on schedule to raise rates. But since then, since the Fed has started to move out, trusting the U.S. economy, now this China stuff happens and casts doubt on the health of the U.S. economy in the next 6 months or a year.
Now, some folks could say, look, there are still some economic indicators that point to a stronger economy. Now might be a good time to sell. What would you say to those folks? I mean, buy, I should say. Buy. Yeah.
I completely agree with those folks. Look, the short-term market stuff and the headlines, that's all great for people who work on Wall Street. But if you're a real investor and you're looking in it for the long term, do yourself a favor and liberate yourself from thinking, oh, this is the big one. Oh, it's all going to fall apart now. And realize that these dips represent a great time to buy.
And there's also, a lot of focus on China's economy and what it means for the U.S. stock market. I want to take a listen to a clip from the New York Times' Jim Stewart. He spoke on the effect that the Chinese markets are having here at home. Take a listen.
There was no intelligent thought behind this. I mean, whatever is going on, it is not going to affect every geography and every stock sector and every individual company the same way. And yet everything was down across the board.
So are we looking at just strictly emotion here when you look at China's impact and what's happening here in the United States? Or are there real problems here that could come home to roost?
Well, there's some emotion, but there's mostly real problems. It's not that the Chinese market's falling. It's why it's falling. Originally, there was speculation that it was perhaps indicative of other problems. Since then, other evidence has revealed there are other problems, like manufacturing is way low. They have devalued the yuan. The electricity usage is way down and showing other signs of an economic slowdown that are real. Now, that doesn't explain why one night China's market's down 7% and then we're going to be down the next day. I think that's a lot of emotion.
Yeah.
But the slowdown in the Chinese economy slows down the global economy, and 40% of S&P earnings are generated overseas.
That's an excellent point. Now, a lot of folks say it's easy to confuse the health of the stock markets with the health of the economy. That might be taking place in China. Is it also happening here in the United States?
Well, nobody knows what the stock market reflects anymore since the Fed got involved to the extent they have. I think the U.S. economy has pretty good momentum on a relative basis. It looks great. But most of those statistics are looking in the rearview mirror. Unsure how China's going to affect, or the global economy is going to affect it for the rest of the year next year.
All right, fair enough. Tom Hutchinson, senior financial editor of the High Income Factor newsletter. To learn more about the High Income Factor, simply go to moneynews.com/HIF. Tom, have a great day.
You too, John.
All right, of course, coming up next on Newsmax Now, we're going to take a look at headlines and punchlines. We love hearing from you as well. We want to hear from you. Who is your choice for the GOP's 2016 nominee? You can vote right now. Go to newsmaxpolls.com and get your voice out there. Make yourself be heard. Stay tuned. Coming up tonight, Ed Klein joins Prime host J.D. Hayworth to talk about the latest round of Hillary Clinton emails. And Larry Kudlow, who's talking about running for Senate. He'll talk to Steve Malzberg amid rumors about that Senate run.